The Rebel Capitalist Show.
Let's go back to the Fed tapering and tightening. Let's just assume for a moment that the government spending stays where it is. Let's just assume they pass this Build Back Better thing, which the probability is low, but let's assume they do for a moment. How far do you think the Fed can go before they implode the market, the stock market? I'm saying, how many interest rate hikes do you think they can do before they crash the market? Or do you think just the fact of them reducing QE down to zero will crash the market?
So I don't think they will reduce QE down to zero, because I think they're going to still have to buy a lot of these. I think secretly the Fed's been buying a lot of commercial real estate mortgage-backed securities. Just the anecdotal stuff I've heard from commercial real estate and the lack of bricks and mortar traffic, I really think the Fed is secretly buying from a lot of large banks here in the US a ton of commercial real estate mortgage-backed securities. We know that they've bought a lot of regular mortgage-backed securities, and people are shocked that they're still buying an enormous amount of regular mortgage-backed securities for residential homes. But I think there's a ton of covert toxic sausage for the commercial real estate. But the interest rate hikes would benefit US Treasury demand here in the US, but they would blow up. This is why the Fed is trapped in a lot of different aspects. Interest rate hikes, they would benefit US Treasury demand, at least on a relative basis, relative to other foreign bonds, foreign government bonds, but they would start to blow up Wall Street banks' ability to sell junk bonds, to sell leveraged loans, to sell collateralized loan obligations, because then people are on a relative basis going to want to look at US Treasuries instead. So the Fed here, they can hike rates maybe once or twice, but they're playing the economy. They should have hiked rates a long time ago.
Yeah,
but right. They sent such a bad signal. They were so worried about asset prices collapsing. Higher asset prices were, I've talked about this with the wealth effect. The Fed won't publicly talk about the wealth effect anymore because of the wealth disparity now, because of the wealth gap. Now it's obvious to everyone. But for 2 decades, you had the Alan Greenspan Fed, the Ben Bernanke Fed, the Janet Yellen Fed, all endorsing the wealth effect, which is a version of asset price inflation and the Cantillon effect. They're publicly endorsing that, saying higher asset prices. Ben Bernanke wrote an op-ed in November 2010 in the Washington Post about this, saying that higher asset prices would be good for the economy. It wouldn't increase the money supply. He promised it. We wouldn't have a money supply increase like what we've had the last 20 months. He promised that quantitative easing wouldn't do that. And he said it would not affect consumer prices. So he said all these higher asset prices, stocks and real estate would allow the consumer then to feel happy and spend more. And for a short amount of time, people did. So we had a fake artificial recovery after the technology stock market crash. And then after the 2008, that's why the stock market didn't crash more, because asset prices were inflated and they were pretending a recovery. But now I think things, the pretense is off, because now we have in the real economy, a lot of people are well aware, and politicians, like you said, are going to get voted out, but there's not going to be any meaningful change because the size of government's not going to be cut. So, okay, they can fire 20, 30% of all the Democrats in Congress, but are Republicans really going to cut spending? Are they going to cut taxes drastically? And are they going to, more importantly, are they going to cut government spending drastically? And I just don't see that. Yeah. In fact, in a lot of states where a lot of Republicans have taken over, I mean, property taxes eventually go up. Look at Texas in many cases.
Yeah, exactly. So how isolated do you think, or insulated, maybe is a better word, are the states like Florida, Texas, Arizona, maybe Idaho, maybe a couple others in there, from the insanity that is spreading on the East and West Coast, like in Oregon, California, Washington, New York, etc.?
I don't think they're that insulated, because I think, and I said this earlier, a lot of people, a lot of more affluent people are going to move to those states, and they're not going to learn anything from voting for bad politicians and bureaucrats.
So they become purple. So they become purple.
Well, look at Nevada. Look at a lot of these states that have changed a lot over the years. Yeah. So actually, most people aren't aware of this, But many decades ago, New Jersey actually used to be low taxes, low regulation. So a lot of New Yorkers, I think in the 40s, 50s, went from New York to New Jersey to escape all the taxes, rules, regulations in New York. And then they moved to New Jersey. Now New Jersey is insane with rules, regulations, taxes. I mean, there's a lot of CPAs and tax attorneys that say, don't die or don't get divorced in New Jersey. That's how crazy a lot of the tax laws are.
Yeah.
The state taxes if you own a business or have a lot of assets. So, I mean, states, my point, George, is that over time, like these states, things change. Human beings don't really learn a lot of the lessons. This is why history basically repeats itself in cycles.
Right.
The main lesson from history is that people don't learn anything from history, and humans repeat the same mistakes over a certain amount of time. Painful lessons of the past from past generations. Painful lessons are. I messed up that quote, but painful lessons from past generations are forgotten over time.
Yeah, that's so true. How can people not just look at history and see the parallels with what is happening today? Going back to your point of history just repeating itself in cycles.
So I get asked this question a lot, and people want easy solutions to problems that don't really have definite answers because the rules, unfortunately, people want an easy solution. And I'm trying to tell them, like, look, all the tax laws for all these assets, because right now, and it's whether you're in the United States or many other countries, Latin America, South America, they're raising taxes on the mining companies like crazy. My point here is that a lot of investments, you have to pay attention now, whether you're investing in real estate with a rental property owner, all these rules, regulations changes, they could change the tenant laws, property taxes could go up rapidly, making it very difficult to be with the math, to be a good rental property owner. Mining companies, the rules, it's not just in normal emerging market countries. So a lot of these more developed countries, the tax laws are going up on mining companies. But the main thing here with your listeners here, this is an investment channel. You're going to have to pay attention a lot to all the tax law changes. It's going to be an absolute nightmare, a mess. You're going to have to check weekly or monthly now on everything, on all assets you own. If you own a business, your investments, it's a mess, unfortunately, because these governments with bad policies from politicians, bureaucrats, regulators, central bankers, there's been so much stagflate tax lie in all these different countries that they're going after assets and tax revenues wherever they can. So if there's an industry, and commodities have done very, very well. So you've had uranium stocks up, natural gas, oil's had a nice rally, potash stocks are starting to do well. These companies could do very, very well I think there's going to be bull markets for uranium and natural gas for many, many years for a lot of different reasons. But if politicians and bureaucrats decide and regulators decide that you can't open a uranium mine or you can't build nuclear power plants anymore, they could just shut down these bull markets.
Right. Well, but do they though? Because let's talk about that, because I think you're referring to ESG with no more capital going in to produce more supply. But does that, although that may curtail demand if that strong narrative is there, if there's zero supply coming online, the demand doesn't go down that fast, and then the price just really starts to go up.
Well, ESG, so ESG is only part of it. What your listeners really have to understand is that DC loves to come up with these crazy spending programs. So the larger the spending program now, that money does not go into the real economy. That money is corporate welfare. That money is, a lot of it is stolen, secret ballot. So the more DC spends on paper, the larger the bill, the more stuff that can be hidden in the bill, the more stuff that can be stolen, the more favors that can be traded, the more unbidden government contracts. So everyone, when these bills come out, like an infrastructure bill, the infrastructure spending might only actually be like 10 or 20%. And then that money, a lot of it's going to be wasted. It's going to be on unbidden government contracts, whoever handed out the most bribes. the majority of the bill is not going to have anything to do with infrastructure. I've seen this I've been here for over 20 years. So that's why DC loves these big bills, because the average American doesn't understand how the sausage is made. And so
they just look at the title of the bill and think that every penny is going to that cause or that intention.
Yes, ESG is a scam. So a lot of corporations, so basically like Goldman Sachs and these others are going to set up carbon cap and trade. Goldman Sachs can then take a cut of all this other tax revenue or all this other carbon cap and trade revenue. That's probably that they've been talking about this for over a decade now to set up something like that. So the more ESG is pushed, but there should be investments. We were talking about market manipulation in oil. If the Biden administration, then they were blaming OPEC, and what they should have done was just approve oil and natural gas leases on federal lands in New Mexico, which were blocked. So and then approve pipelines. And then approve oil refineries. So there actually hasn't been a new oil refinery. And this is why, even though oil prices have crashed a little bit today, they're down almost 4% today. This is why gasoline prices in the US are still over $3, because there hasn't been any new oil refineries built in the US for decades because of all the rules, regulations, red tape. So all the oil refineries that we have are all very old ones that have been upgraded. And then that's inefficient because regulators say that we should just upgrade the existing refineries, but then there's all these rules, regulations, red tape on those instead of building new oil refineries. So the investments that should be made into energy with better nuclear power, investing in research and development for better nuclear power technology, that's not being done. We talked about in past interviews with natural gas storage tanks, that was not done. Real good infrastructure would have been for the last since 2008 with all this shale gas byproduct that we flared off. We could have stored it in natural gas storage tanks. So we would have an extra 13 years then, almost 14 years of natural gas put in storage tanks. Instead, that was flared off. It was just burnt. It was wasted.
Yeah, right. Yeah, that's government in a nutshell. Although that wasn't government. That's a good analogy, I guess, for how government spends money. It was kind of the entire shale industry.
Well, shale was done to protect the petrodollar. So that was one of the main reasons. But we discussed in the last interview that the petrodollar is not as important now. But at that time, the last time, in my opinion, the petrodollar was important was during the 2008 financial crisis. So that's why the shale industry, it was extremely unprofitable for the most part. That's why it was subsidized. They tricked pension funds into investing trillions. Wall Street funded it. The Fed subsidized it. So the oil production growth, the U.S. could say at one point, the U.S. grew oil production more than Saudi Arabia, but it was extremely high cost and extremely unprofitable compared to Saudi Arabia.
Yeah, therefore unsustainable.
Yeah.
And it just kind of a money pit.
But George, the U.S. was able to have all that extra oil revenue and export some of that oil. So that had the narrative that the U.S. economy was still doing well from 2009 up until the 2019 repo crisis. I mean, the problem started before the pandemic. The repo crisis, I think a lot of things broke during the repo crisis, just with hedge fund leverage. There were a ton of, the Fed's balance sheet went up $1 trillion officially in only a couple months.